Now let's get talking amid uncertainties and Nigeria's inflationary pressure touring from the 17-year high. Experts are in high expectations for official CBN MPC meeting to make crucial decisions on the monetary policy issues. At the heart of the current challenges impacting Nigeria's economy is the exchange rate fluctuation, inflation and ongoing global economic slowdown, coupled by Russia and Ukraine war, which have significantly impacted global oil prices, a crucial factor in Nigeria's oil-reliant economy. These uncertainties, according to experts, requires CBN's attention to craft a monetary policy that addresses both domestic and international challenges. But when will the CBN monetary policy converge? And that's the big question. Well, let's get to understand all that has been happening. Nabila Mohammed is a research analyst with Chapel Hill, Denham. Good afternoon and thank you. We're live. Thank you for joining us on the program.
Thank you. Thank you for having me.
Yes, a lot of talks around monetary policy around this time, but I don't know, maybe we'll start with like an overview of what's been happening in recent times, the moves around the FX space, also the moves, what we've been hearing about banks to be recapitalized moving forward. What do you make of some of the messages or information coming from the Apex Bank at this time?
Okay, so for the MPC, we all know that the MPC is a committee that is saddled with responsibility of reining in inflation or monitoring the rise in inflation of the country and also looking at the FX side. That is their responsibility to make sure that they stabilize both on both fronts, inflation and FX. And recently, we have had 2 MPC meetings that did not hold. And in response to that meeting that was not held for both instances, that's for September and for November, what the CBN governor disclosed was that, according to the CBN Act of 2007, they have already had 4 MPC meetings this year. So what do we think? This CBN governor's stance is more inclined towards having the view of an expansionary economy in the medium to long term. However, he also alluded to the fact that they would remain tight going forward. And in fact, interest rate is currently at 18.75%, which is quite high, the highest we've had in over how many years? 10 years. And if we're looking at the FX space, we have had them talk about an FX framework that they are going to release into the market. There's also the fiscal leg of things that involves the inflows that are expected, the low-hanging fruits, and also the fact that we expect the fiscal policy side to look for means to diversify export earnings in order to have a long-term stability in terms of FX for the country. But overall, everything that has been happening, we are still yet to see some policies rolled out in order to provide clarity, even with the talks around the recapitalization of banks. In fact, there was a news that was out that the CBN was debunking that some banks were saying that they are not adequately capitalized. However, the CBN governor has made it clear that they are looking to make sure that the banking system, the banking space is duly capitalized in order to make sure that we reach our goal of the $1 trillion economy. So all these things have happened in the last, couple of months, especially after the CBN governor was climbed into power. So there are a lot of talks, yes, and there are a lot of expectations, and there are still anticipations of policies that would provide more clarity with regards to how they intend to fight inflation and how they intend to stabilize FX.
Indeed. President Tinubu is clear that he wants interest rate reduction. Of course, that's from the financial institutions. But some will say that can create free money or cheap money that might increase default rates and affect the banks in another way and lead to instability in the banking system. I don't know if you if you're thinking along that line.
So for the fact that the president has said they want a low interest rate environment, it is obvious that it's not something that they would materialize right now, given the current situation. We are still, inflation is still at a very record high of 27.33% at the last print that we know. and some of the issues around that are fueling this inflation, especially with the removal of fuel subsidy and the devaluation of the currency in the second quarter, all these things are not in favor of a low interest rate environment. So we are not expected to see that now, and this was even confirmed during the 58th annual CIBN dinner, where the CBN governor said that we'll still have a tight monetary policy regime in the first half of 2024. So I believe that statement by the president is more likely in the medium to long term, but not in the short term, where we still have rising inflation, where we still have a lot of instability in terms of FX that is also fueling the rise in inflation. And also the fact that we shouldn't close our eyes to the fact that there are issues with regards to infrastructure, ensuring there is stable power supply, ensuring that the insecurity is taken care of. I mean, food inflation, which accounts for the larger portion of our CPI, is currently at 31.54% year on year. So all these issues would have to be addressed before we start to see a low interest rate environment. If we even looking at some of emerging markets, because of the nature of our inflation, which is largely cost push, we are not ruling out the fact that there is still an element of demand pull in it, which interest rate hike will adequately cater for. The cost push side is where we need to look at in terms of infrastructure, power, insecurity, transportation, in order to really address the fact that our inflation is largely cost push. So in my own view, I feel that the statement by the president is not for the short term, but for the medium to long term, when we start to see the high base effect kick in, especially in our expectation is that in H2 likely start to see that materialize and happen. But for now, we are still in a high inflationary environment, and the odds are not in favor of having a low interest rate regime for now.
Brilliant stuff. Now, let's talk about initiatives that we've seen from the CBN. Before now, we saw the CBN getting into the pharmaceutical space, agricultural space, creativity space, movies, and everywhere. The CBN went into development financing and all of that. Some say this is not really the core mandate of the Apex Bank. Moving forward, what sort of interventions do you think the Mr. Cardoso-led CBN, would you think they will be undertaking to actualize this inclusive growth that we talk about?
So one of the key things that I took away from the CBN governor's speech at that annual dinner was the fact that he said the CBN will stop any sort of passive policies that are not directly tackling inflation or addressing FX instability. So going forward, what we expect based on that statement is that we would likely see more policies focused on the addressing inflation and FX, and not delving into any sort of fiscal kind of activity that is left for the fiscal policy makers and not the MPC. So we'll definitely start to see policies around that. In fact, they have spoken to the fact that they are going to introduce an FX framework that will sort of boost FX, give some form of transparency around how FX dealings are and the market runs. We are also going to see, we've also heard that they have a committee that has been set up in order to gauge the daily liquidity in the system and ensure that it is optimum and it is not above or below, just okay, in order to address or rein in inflation. So those are the kind of things that we want to hear going forward, and those are the kind of things that we feel would address, inflation and FX. Those two core mandates, are the major activities for the MPC, that's the Monetary Policy Committee. So since he has said that we will not be seeing policies around all those, as you call it, delving into the movie space, delving into agriculture. It's not as if they do not have a part to play, but then it shouldn't be the core focus. The core focus should be along the lines of policies that would address these two key mandates that the committee is saddled.
Well, true. I agree with you. Well, there should be a limit to the level of interventions there. Are you worried about the level of debt? Many would say that this would, of course, affect our currency and, internal and external debt. This would affect our currency and also investors' confidence. I don't know what you make of this, Nabila.
So if you're referring to how it will affect investors' confidence, let me start by saying that at least Moody's upgraded our outlook from to positive, from stable to positive, on the back of some of the policies that we have seen that was rolled out since the start of this new administration. And yes, we still expect some more clarity because investors, especially the foreign investors, are more concerned about FX. So if FX regime in the country is not adequately addressed, there is transparency around it, there are key policies and guidelines in order to ensure that everything around that space is totally addressed. We would continue to see them being worried about that. But for the fact that we have seen some sort of improvement, some sort of recognition for the policies so far, I feel like it's a step in the right direction. And should this be maintained and sustained in terms of making sure whatever policy statements are actually executed, actually implemented, it will provide some respite and also boost investors' confidence that, okay, these people mean business because they are saying exactly what they are doing, exactly what they are saying. So all these things have to materialize first. We don't expect a sort of magic to happen and everything just falls into place, FX is stabilized, everything in terms of inflation starts to drop. We don't expect that to happen drastically. However, we expect that policies that have been set will be implemented, and when they start to see the action, investors' confidence will be restored, and we would stop to see, having to see or news flows about investors worrying about a lot of things.
Now, following what we've seen, we don't know, like you said, the CBN governor said they've had 4 meetings this year, so we expect the meetings to commence from next year, which he says is a statutory a number of meetings they should have for the year. But what are those things, or what do you think will be in the plate for them to take that decision that they might take? Some say there might still be a hike because inflation is also going higher. Well, it's a projection. Some say there could be a retention. I see the smile there, but I don't know what you think might happen. I'm talking about what we see on ground. So what do you think will be in the plate for them to really look at to make these decisions moving forward?
So judging by his stance to maintain a tight monetary policy in H124, we're not ruling out the possibility of a rate hike. It's possible that that will materialize, but the way he has, come out to talk about how the committee is addressing inflation in terms of liquidity management, we might see more of that. And when I say liquidity management, what am I referring to? I'm referring to instruments around automobiles. Since August, the total value of automobiles that have been issued is over 600 billion. And we are also seeing that this has translated to higher yields in terms of the issuances, even in the treasury bills space. We've also seen that they are still actively involved in the CRR debates just to make sure that they mop up excess liquidity from the system. So we're not ruling out the fact that there will be a rate hike, but then we are also saying that there would most likely be other tools that will be utilized by the committee in order to rein in inflation. So while we are not certain exactly what date the MPC meeting will hold in January, which is the next meeting that is to be held, what we feel they will be discussing, of course, is still inflation and issues around FX, and hopefully would have that framework that we have talked about in the market as at then, and we would be able to understand really what their pathway is, what their plan is in terms of FX clearly. But the fiscal leg of things will also have things to do with that. However, for MPC, inflation is still high, and they will discuss issues around and policies and instruments that they would use to address it in H1.
Nabila, in 1 minute, do you think that the free market, supply and demand, can help us in our address this disparity in the foreign exchange market?
Yes, to an extent it can. I mean, you will get to see the true value of the currency. The reason why we are seeing so much volatility is largely as a result of the insufficient supply. So imagine a market where there is sufficient supply of FX. We would not have the volatility that we see currently because there is supply of it, so there will be no need for rates to be going, outrageously high back and forth every day. So when the supplies leg of things is really fixed, yes, a free market, would be able to give us the true value of currency.
Very much, Nabila Mohammed, research analyst, Chapel Hill, Denham. It's your first time on the show. We appreciate this. Do have a great week.
Thanks.